Welcome, everybody, back to another episode of Finance Junkies. We are here December 11, 2023, 8:58 p.m., 5:58 p.m. Pacific Standard Time. I'm here with Carlos. KRIS and VITALY should be joining in a bit. Yeah, we're live.
Oh, I don't see us on the... Oh, there we go.
There we go. You were just saying, Carlos, you can't wait till this year ends. Can you
how many people in the chat are just ready for 2023 to be done? I am ready for this to be over. I had an inquiry about my schedule for the new year, and so I had to redo something on my resume, and I just started looking back at what I was working on this year, and I'm just like, I remember these projects being brutal, one after the other. Just there's been a lot of change this year, and I am ready for a fresh, clean slate, and I'm actually getting very optimistic on 2024. I have this feeling that it's going to be one of those life-changing years.
I think 2024 is going to be very exciting. I am now a believer in the Bitcoins of the world. It's
funny. It's funny you bring that up. I had a feeling this like probably a day or so ago that I haven't had since, I don't know, 2008, 2009, when I woke up and I saw like, $400,000 worth of Apple in my porthoportfolio.
Yeah, people don't know the story where you took 10 grand and you turned it into 400K for Apple. I mean, people know if they've been
the short story is I had a company with two friends of mine, and this is long before the iPhone came out. I was like, we're buying so many Apple devices.
By the way, real quick, shout out to Seymour Duck. Thank you for being a member for 2 months. Appreciate it, man. Means a lot to us.
Seymour Duck, thank you.
Go ahead.
And I was trying to convince my business partners at the time that said, we're spending so much money on Apple products, we really should just start buying a small percentage of the money that we're making every month and just start investing it in Apple. And they were like, no. We had a fight about it, but I started investing on the side. And I think all told, before the iPhone, I forgot, between the year of like 99 and maybe 2001, 2002, I put about 10 grand in there. And then got really busy. You guys know the story. I forgot about my portfolio for like several years. And then one day I just said, do I even have the password? Found the password, logged into E-Trade or ShareBuilder at the time. And it was like $400,000. I couldn't freaking believe it. And it was amazing. There's a feeling there's a feeling of vindication when you wake up with that much money in your portfolio, just in one position. And you say, this took a long time. I'm just going to allow myself to feel good about this. And I had a moment when Bitcoin was around $45,000 when it was peaking up around
this weekend, right? Right.
Yeah, like this last run. Now, don't get me wrong. I'm not a Bitcoin maxi, but I do believe Bitcoin still has a long time to run. I think the ROI from the lows is still going to be about a 10x. So I still think we're looking at about 150K. And about 100,000, 120,000, I'll probably start scaling out. But I had this moment when I'm looking at how much Bitcoin I've had. And it was one of those investments that I've just essentially forgotten about for 4 years. And this was what prompted me to ask that question the other day in the chat. Like, how many of you had held, what's the longest what's the position in your portfolio that you've held the longest, and how long has it been? And I've been holding this thing for almost 4 years, just a good part of it. I started investing probably in 2016.
Answer that in the chat. What's the longest you've held something? But while you guys are doing that, what did you do with the 400 grand when you saw?
I ended up taking that out, moving some of it. I paid some bills off. Like, I paid some bills off, had some moving expenses, some life expenses, ended up selling that and moving it into different positions and spread it out throughout the years.
Like, you didn't make any like fun purchases?
I mean, I haven't really made that many. Maybe that drum set was one of the like fun purchases. Maybe you can consider like my car. I bought a Tesla, but I don't know. I've stopped doing that. And by fun purchases, I mean like, no, I didn't go out and buy like a brand new TV and a new Xbox and a bunch of games. No, I didn't do that.
Gotcha.
Just paid some stuff off and tried to just limit my liabilities. I kind of forgot what that's like, honestly, spending money like that on myself. Now it's all about like family and kids, or I look at something I could do in the house, like renovate the house. It's all about building for the future. I feel bad. I have a serious guilt problem spending money on something that's not going to turn into something more in the future. Just spending money on a depreciating asset, or spending money for something.
Wait, are we talking about the Model X you got?
The Model X? Yeah, the Model
true.
X.
You did. That was the car. That's the one thing you really got.
That was like the one. Yeah, and that was end phase. That was when end phase was over 300. I was like,
Thank you, end phase, once again.
I was like, well, I can pay for it now, so why not?
Vitaly, we're talking about what's the longest you've held an asset. We got Palantir 3 years, Tesla.
Yeah,
Apple,
the question is,
12
in your
years.
portfolio, what is the position you've held the longest, and how long have you been holding it?
So
Or how
real
long has it been
estate
in your
is,
portfolio?
I mean, I know you're talking about equities, but real estate I've held since 2008. I think that's the longest piece of real estate I have right now, 2008. And I sold before that to raise money to buy some of that real estate. So I was buying and selling for a while until I realized that wasn't going to work long term. So I started in 2002 investing. And but yeah, so since 2008, I've been holding every piece of real estate.
Well, but aside from real estate, portfolio-wise, stocks,
Yeah,
What's the longest one?
I like you use Tesla, right?
It's
5
well,
years?
Tesla is 2018. Bitcoin is probably a little bit longer, but I've made mistakes in Bitcoin since 2012. And then in 2017 is when I've been holding Bitcoin since 2017.
Well, yeah. Well, if you count that Bitcoin, those 4 Bitcoin that are sitting on that hard drive somewhere,
You were holding.
that hard drive is gone. That hard drive. Yeah. I'd say 2016. I started investing. I put like $500 in, and then when it peaked at that December, I fucking cried in my house. I literally was here like,
Dude, that was December 2017, right?
Yeah, because
I was in my macroeconomic class. I had my Coinbase. Remember this like it was yesterday. I saw Bitcoin at 20K, and a whole class, these are 19-year-olds, are going crazy that this crypto thing is happening, right? All of us are downloading Coinbase. All of us. The professor, he shits on Bitcoin. Like, he's just this a macroeconomics guy. He like obliterates the concept of it. Right. And then it goes to shit. So all of us are like, damn, that guy was smart. And then 2 years later, we're like, this fucking idiot who told us to sell, like,
well, no, he was right. 2 years later, 2 years later, he was buying back in, and you weren't. That's the problem.
Well, maybe we'll see. I doubt he was buying back in, but
maybe he knew about the halvings.
Yeah, that's the thing. If someone had just explained to me the way that the halvings control the inflation rate, like, it would literally have been a 15-minute conversation. If someone just explained to me, that 15 minutes would have been absolutely
okay. So let's do this discussion before Chris gets here and we get into macro. Let's do the Bitcoin discussion. So Bitcoin's down about 5%.
Oh yeah, we don't want to take up Chris's time. It's important.
Oh, well, yesterday
we got to get to the banks. We got to get there as fast as possible.
Him and Matt, we didn't have a show yesterday. Did you see that? We're the finance junkies, and they discussed Bitcoin.
Oh, they did. I didn't know they discussed Bitcoin.
What are those guys saying?
Okay, so Bitcoin's at 41,672.
Well, before we even go there, this is what happens, by the way, when you own extremely volatile, high quality assets. We are going to outperform every motherfucker out there buying TFC. No matter what you do, because at the end of the day, it's just the way the math works.
The way I've calculated my options, if TFC hits 45, Bitcoin would have to 5x for you to outperform me.
Bitcoin is already 20x for us.
Okay, but that's not we're talking about right now.
I'm just saying.
So yes, you've already outperformed it. Congrats.
You can always,
no. But I was saying, and I'm going to continue to outperform. It's not only Bitcoin; it's Tesla.
No, you woke up with. Did you drink a Red Bull or something? You just like, and you're like, I'm outperforming. You just don't care.
Because you can always cherry pick a specific time frame and say this asset will outperform this asset in this specific time frame. But when you look over the course of it, if you look at the top performing assets in since Bitcoin's inception, it has been number 1 or number 2 on that list. It has outperformed.
I think it's been number 1. I think it's been number 1.
Number 1, but then there's always for every 4 years, there's always one down year. There's always one bad year.
Right, but in terms of just the growth every year on average, I believe it's over a double. But basically, what doubles every year on average? Do you know what I'm saying?
Yeah.
So it's not going to work out for everybody who's not investing in these high quality but volatile assets. You have to put a piece of your portfolio just into it. And what I said to you before, Amit, remember we were talking about it when it was 15, 20 grand, like 1%. Correct. Just do 1%. Like, big deal. Yeah, you lose 1%, it doesn't mean anything. If it becomes 20%,
let's talk about it.
It's
down from 45 grand, almost hit below 40.
And I saw your tweet and I responded with a tweet. I'm sure you saw that too.
Yes, yeah. But by the way, my tweet was not that intense. I'm a news guy, so I just reported Bitcoin's down.
I got you.
Down. But you were like, oh, well, it's still up 100,000%. I was like, all right, I get it. But I want to take this opportunity. What is the halving? Because I think I learned about it this weekend. I actually watched the video and I tried to understand it more. What is the halving? Why is it important?
Halving.
Halving.
It's coming in. I think it's
and
April,
why did it crash this weekend? Those two questions. Go ahead.
April 24th of this year, the halving event will take place. And essentially what's going to happen is the inflation rate of Bitcoin is going to be cut in half. And if you think about it, it's actually going to, that's actually when it's going to become more rare than gold at this point. There's a great video that Andrej, the guy, I forgot his name, he did explaining all about how the inflation rate of
okay, I'm gonna sound like a nerd, but I watched the full Andres video.
Did you see it?
Like I'd never watch his shit. I finally clicked on it. I was like, I'm curious what this halving is. First of all, he clickbaited me. He said, how high will Bitcoin go? Get to the end of the video, he doesn't fucking answer the question. I'm like, okay, whatever. But yeah, I learned what the halving is from him.
Okay, so you learn what it is. So every 10 minutes, new Bitcoins are introduced into the system, essentially diluting the existing supply. And that number is 6.25 Bitcoins are created. That 6.25 Bitcoin is awarded to the miners proportional to the amount of work that they did to create the previous 10 minutes block. So every 10 minutes, 6.25 Bitcoins are created, which is about 300 and something thousand Bitcoins per year are created. And they're given out to the miners that did the work to create the last 10 minutes on the blockchain. As of April 24th, that reward is going to get cut in half. So instead of 6.25 Bitcoins being introduced every 10 minutes, there's going to be 3.125 or whatever it is Bitcoins introduced every 10 minutes. What that naturally does is it slows down the rate of Bitcoin's natural dilution. It's almost like a stock that is continuously issuing shares, diluting the shareholders as it goes. Now that rate's going to be cut in half. You understand? And the only way the miners make money is by selling those Bitcoins. And so leading up to this, they realize they're making more Bitcoin now than they're going to be making in May of next year. So they start to hold all of this. What all of that does is start to relieve the sell pressure. And that's why you saw it run up so much. Now, why did it crash from $45,000? Because if people were buying and listening to us at 15,000, they're up 3x. And people
people saying Ponzi scheme. Who said that? Luke, Ponzi. So when Apple starts out and prints out shares and obviously gives options to its employees, is that a Ponzi scheme? You don't call it a Ponzi scheme. I get it has cash flows, whatever, but it's not a Ponzi scheme. There's a limited supply. So as in anything, if there's a limited supply and you keep decreasing the supply, you can call it a Ponzi scheme, but that's just the way that Bitcoin works and the way the metrics are. What is it called? Tokenomics, right? That's the tokenomics.
It's a currency pool,
right? But the tokenomics of it is the way it works. It halves. So I don't see it as a Ponzi scheme. You don't have to believe in it. Don't buy it. That's fine if you don't believe in it. But everyone who's not believed in it for the last decade has missed out on some massive opportunity. Sometimes you just have to believe in something, not fully understand it. And unfortunately, everyone who comes into Bitcoin doesn't fully get it. I don't care if anyone who says they do absolutely understand everything about the blockchain and blah, blah, blah. No, you're not programming it. You don't know what those guys are doing. But as long as you get the high level concept that you have an asset that is becoming more scarce, right? And it's replacing gold 2.0. Honestly, like I keep going back to 1% of your portfolio is not going to murder you. But in 20 years, if that's 20% or 30%, that'll mean something.
And the people in the chat that are saying, but Apple's a business, Apple makes stuff, Apple has real metrics. You're comparing Apple to the euro. Like you keep thinking you're comparing it to a company. It's not a company. The euro doesn't have real metrics. The euro doesn't make stuff.
Yeah, every currency. There.
Exactly. And Philip Rizzo is said at 610. No, USD is the scam. It is the scam. Your money, the fiat currency that you are paid, is devalued. There was someone that was comparing the price of cars. They were saying for a Model 3 that you purchased. There was a guy who did a video, 2018. He purchased a Model 3, and it's had 100 something thousand miles, and he was looking back at it. The purchase price was like $53,000 or whatever it was at the time. That car would have to sell for $76,000 or something today. Like you forget this. You forget the idea that as they print more money, the value of it, the spending power that you have in the bank goes down. And so if you are not getting a better return than the inflation rate, you're actually losing value. That to me is a scam, because what they're essentially doing is devaluing the work that you put in to earn that money. That to me is a bigger scam than what anyone thinks of.
I'm not going to call it a scam, Carlos. The reason is because that scam makes all of us rich who understand this little scam. So even though I call that a scam, but I'm saying fiat currency is just the way the world works. And if you understand your money is devalued because they have to print more to pay off debt, because that's the way the system works. If you understand this, then this is why you buy assets and you hold them for a long time, because hopefully that outperforms the currency devaluing. So I don't consider it a scam. I consider it the way the world works. but you still want to put most of your shekels into hard assets, Bitcoin, obviously real estate, and good equities.
But when you consider the fact that true financial education is not pushed on a majority of the population, and over 45% of the population has no assets. Literally, they don't buy assets. They keep money in the bank. When they even have money, when the inherent value of that money is being devalued over time, that to me is the scam.
Well, I think the scam which we keep talking about is there's no education, no financial education for the people who are doing that, who don't understand that they have to buy assets. But honestly, it's no one here in the podcast. You guys all watching it obviously understand you have to buy assets. Otherwise, you wouldn't be watching fucking four guys talk about finance every single day. But everybody else, the other 98% of people,
I think it'd be better
don't
if
get
you
that.
defined what an asset actually was, because I think a lot of people, they think they're owning asset and they're actually owning liability.
Yeah, Vitaly, I think you're echoing. I just talk real quick. Who is that?
I'm muted.
Who is that? Carlos, is that you? Let me mute you real quick. Yeah, Carlos, that was you. You got something around in the background.
I think you need to define what an asset is versus what a liability is, because I think a lot of people buy liabilities thinking.
Bingo! Absolutely. Bingo. Go ahead, Chris. Define it.
So,
well, Rich Dad Poor Dad once wrote in a book,
and we talked about this.
Dude, I read this book cover to cover when I was like, 20 years. I had no idea what the fuck he was talking about, but I was reading it. I thought I was getting smarter.
We've talked about this, Amit. Remember on the cowbell,
yeah.
the second version of it that was deleted.
Go ahead. Check. Can you hear me?
Yes.
So I think the difference between an asset and a liability is, one thing, it's ownership over something that can generate tangible value over a long period of time. I mean, that's what I interpret it as. I mean, there's the textbook definition that you're going to see in economics, things like real estate, things like, real estate is a primary example, but even that, it depends. Like, okay, so if you let's say you buy a home, right? And you buy it at really below the market, you don't have any financing on it. The property taxes are exceptionally low. That's an asset. You could put someone in there, rent it out. You generate cash flow. That is an asset. But you can also have, hey, you bought a home, let's say in the middle of nowhere, you overpaid for it, super expensive, and you're paying up the wazoo for property taxes, and you can no longer afford it after 5 years. That's a liability, because every month you're literally like taking money and putting it out the door. So I think each and everything that you do, whether it's an investment, the difference between assets and liabilities is a really good way to interpret how you should be thinking about these things. So, Yeah.
Well, but then in that sense, how would you rank fiat currency?
What do you mean? Fiat is an asset. It devalues over time, but it's still an asset because you can buy things tangibly with it. You can lend it to people and make money off of it.
But then, I guess you could say fiat is like a car. It's a depreciating asset. Inherently, it's inflated away.
There's different terms, but the one I like to go with the best in terms of asset and liability. Liability is anything that takes money out of your pocket. Anything. So you can say a house can actually be a liability if you live in it, and it takes money out of your pocket because you have to pay your mortgage, you have to pay your insurance. It can become an asset when you are making an income on that thing, or it puts money in your pocket. It's very simple. So all of a sudden, I'm renting out the same house that I'm going to leave it one day, not live there. And all of a sudden, I'm renting it, and it covers all my expenses, and it gives me a little bit of cash flow. So that's the way I define it to keep it simple. Something that takes money away, something that brings money to you.
Wait, but when you consider the fact that if you bought your house, say $500,000, and you're living in there, you're paying a mortgage. The mortgage that you're paying is so that you can fully own the house. But if the house appreciates in value while you're living there, right? Say 2 years later, it's worth $600,000. You have made the equity appreciation.
Yeah, I know you're considering equity as like part of net worth. That's fine. You can do that, but it is not an asset at that point. It is still a liability because the minute you cannot pay that, the bank will take it away.
Right, but
you have to put it out of your pocket.
But you owning that home, you could take out a loan against the value of that home, right? So it is an asset that you could put down as collateral.
Once again, you have to pay that loan. As long as you're taking money out of your pocket, even for the loan, even if you took out money, no, because you have to pay back the loan. If you put the loan onto your tenants, which are paying you rent, that's when it became the asset, at least in my point of view, and Robert Kiyosaki's point of view.
I mean, so basically, this is the standard textbook definition of what an asset. When businesses own cash, inventory, accounts receivable, these are all tangible things that you own. Some of these things depreciate over time. That's why you can actually write things off in depreciation versus things that are naturally going to be going out the door. Things like employee wages, benefits, vendor payments, long-term loans. The one thing that they don't hear is property taxes and all the other little things that come along with that insurance, on the asset itself. So a lot of times what happens is people think that they're buying an asset like real estate, but when you look at all the payments that they have to make on it, it could be in excess, in which case eventually they have to sell the asset just to pay the liabilities. And so that's where a lot of people tend to get trapped. So just try not to overpay for things, because if you overpay for them, it's not actually an asset. It's more of a liability. And especially if it's something that you have to constantly have upkeep, maintenance, all the stuff for. So just
I want to bring this
All right,
point
hold on
home.
real quick. Vitaly, last point, then we got to move on. Go ahead.
Yeah, I want to bring this point home because I started investing in real estate a long time ago when I was like 21, 22 years old. And I started buying houses in basically bad parts of town and renovating them myself and doing all this work, right? And people thought I was crazy. But a couple of people were like, wow, that is really smart. I see you succeeding. My uncle was one of them. He was like, oh, I'm going to follow you. So 6 years later, after I started, he started following me and started buying houses right around the same area. But the difference was I did the work. I went there at 3 a.m. when I had to. I fixed it in order to make that little bit of rent to keep it being an asset, to make the difference between spending money and making money. I kept working hard. He got tired of that grind, and that asset, Carlos, as you say, completely became a liability. He ended up losing multiple houses, getting a divorce in the process. Like, it all fell apart because he was not willing to do the things you do in order to sustain what an asset needs to sustain, which is make sure you make more than the amount of liabilities you have on that thing. So two things, two houses, same area, different ways of managing that same thing. And it turns into a completely different thing, which it turned into a liability for him, not an asset.
But then what you're saying is the management of the asset is more important.
It's very much part of it. But I'm saying he wasn't willing to do all the shit I was willing to do.
But even your portfolio, even the assets that you have under management, you have your own assets under management. If you mismanage your own portfolio, even if the stock goes up, you can still lose a whole bunch of money.
I know. My point is just because you have a house, it doesn't mean, so Kris is, I'm agreeing with Kris here for once in my life, that it doesn't mean it's an asset. It could actually just be a liability, but he did not know that. This is what I'm saying. The problem is he did not know he had a liability. He thought it was an asset and he thought it would be simple, but no, it just doesn't work that way. So it's not automatically one or the other just because you have a house.
Usually it's the valuation that matters, because if you buy something for $1,000 that you bought for 500, technically it's an asset because, you basically have this giant cushion. But this is the one thing that I see on a lot of companies' balance sheets. And this is the one thing everyone should be looking at. When you go to the balance sheet of a company, you're looking at two parts. You're looking at the assets and you're looking at the liabilities, and then you're looking at the shareholder equity, because that's what really matters for a lot of businesses. The assets, though, can be loaded up with a lot of fake shit that doesn't mean dick. All right.
Yeah, like the computers that the company owns. Those are assets.
Yeah, that's one thing. But the one thing that people really, really, really need to strip out when they invest? Goodwill. Goodwill means absolute dog shit. Okay?
Right, because if you're hunting for goodwill, you might not find a good movie.
No, don't make a joke of it. Goodwill. Goodwill is actually
Kris didn't. Mr. Curse over there didn't get
Goodwill
it.
Goodwill is one of the things I absolutely freaking hate when people come to me and says, "Oh, the company's book value is so undervalued," and then I take one quick look at the balance sheet and I see that they have a fuck ton of goodwill that can be literally just completely taken out and turn this company into a giant giant trap. So just letting you know, goodwill. Do you know how goodwill works, Amit? You guys know how goodwill works?
I saw the movie. I'm pretty sure.
Anyone?
It was actually
explain it. Go ahead, explain it.
Okay, Kris. Last thing you have 2 minutes, and we got to move on to CPI.
I'll do it. Imagine right now you have a business, right? It generates a certain amount of cash flow, blah blah blah. You value it. You bought it for $100 million, right? let's say the next guy comes along, buys it from you for 2 million, it generates the cash flow, whatever. The guy just paid you an additional $100 million of goodwill. So over time, that goodwill asset can be depreciated. It does means absolute dick, because let's say you go through liquidation, the person who's buying it from you may not buy for 2 million. They might buy for only 1 million, which is the real value. That 1 million additional that you have on the balance sheet means absolute dog shit. So when you do your valuation, especially when you're doing it for, like, let's say valuing a company, when you see goodwill, just strip that shit out. Don't fucking look at it. At least with intangibles, you can actually value it to a certain degree. But goodwill is just fucking like fugazi. All right. It just means that the next guy is willing to buy shit from you for a more expensive price. Literally, just be careful of goodwill.
Okay. Who was in Goodwill Hunting, Amit?
Matt Damon, the Ben Affleck, right? And then the Robin Williams.
Boom. What happens in the movie?
What about the chick?
So the chick, I don't know, but they're at the bar, and then he makes the apple joke. Yeah, he's like, "How about them apples?"
What's the movie about? What's the movie about?
So the movie's about. Okay, hold on, no, I know this. You're not gonna put me on. I know
it's called the log line. What's the log line of the movie? How they sell the movie?
No.
This is about a bar.
No, but let me give some. The 361 people here are gonna respect me. Matt Damon's a mathematical genius. Okay, but he has a troubled past. And so he falls in love with this girl, and he can't understand how good he is in math. And then he starts going to the therapist, and then the therapist is trying to help him. He's had a difficult relationship with his dad. The therapist fell in love with some girl, and so he's like, "Don't like, you have to fall in love with the girl, like, go for your dreams," type of thing.
This is all over the place, dude. But
then Ben Affleck is they're in Southie. They're a Southie in South Boston, right? Okay. And basically they're poor. They work in construction jobs. He has to go on to like chase the girl in California. That's how the movie ends. And then what's the main conflict? Dude, the conflict is...
What's the point?
No, the point is that he's super smart. And then he goes to therapy. Oh, because he doesn't want to use his skills. The professor wants him to like become somebody. But he's just like, no, I'll always be like a broke kid from Boston. That's
all right. You're close enough. It's pretty good.
Okay. Anyway, CPI estimates for tomorrow. Every bank on the street has them at 3.2 or below. Average is at 3.1. We are in a Goldilocks zone where unemployment came down to 3.7%. So we're getting inflation coming down with growth still being there. A lot of, analysts are like, this is a really nice area for a soft landing. If we get a 2 handle on inflation, it'll be really nice. Probably going to be at 3.1. Let's start off with Chris. What is your state on the current macroeconomic situation in the United States? And do you think December is going to end out to be really good?
I mean, so far the month is looking good, but yeah, this is not what you want to see with inflation. I think
why
you kind of want to see a constant downtrend. What we just saw was a reversal of some of the factors that led us into this Goldilocks scenario where everyone's thinking that we're going to get cuts by March. But if you look at the CEME estimates, they're starting to go on the other side. So you're seeing that this March rate cut may not happen, and instead you're likely to see maybe like a more guaranteed would be a June cut. But imagine right now, last month, what was it? 3.2?
You got it right. 3.2. You're the one who produced.
And it only goes down by 3.1, or it only goes to 3.2 again, right? That's a bad sign. That means that inflation is persisting. The last 100 basis points, or the last 100 basis points of inflation reduction, what the Fed is actually looking for is going to be much, much harder to get to than people are expecting. So, we've seen a large amount of deceleration, but I don't think that we're going to keep seeing that level of deceleration. So expect, CPI drops to be in like maybe the neighborhoods of maybe 10 basis points a month, if that, which means that we're still a long ways away from the Fed's target of 2%. So
the data that I was looking at seems that the Wall Street analysts by and large are in consensus 97% that we're going to get a pause. We're not going to get a rate
100%
drop this one. Yep. But over 57.7% on the data that I was looking at believe that we will see the first rate drop the next meeting.
Well, that's that probably not next, but a lot of them are thinking in March. I agree with Chris though. See, let me pose the question to the panel. If inflation's not at 2%, let's say that 2.8, 2.7, whatever by March, is there any justification for Jerome Powell to go against his word and cut rates unless the economy is breaking. I don't think there is. If the economy is not breaking by March, then the CME thing that KRIS is talking about almost 40-50% of people think March is the first cut. There's no way in hell Jerome Powell's going to knock it in March and give us what we want, which is a rate cut that early.
I agree with you, but to Chris's point, a lot of the Fed data is backwards looking and a bit
Correct.
dated. So it's hard to, like, we would have to see that, we would have to be seeing some of that data now for them to catch up to that by that meeting. Like something does need to break in order for them to say, okay, we've gone too high for too long.
Well, the biggest challenge that you're seeing right now is twofold. Okay, number one is
zoom in on this, KRIS.
Yeah, this is the Cleveland Fed nowcast, and one of the things that you're seeing is November looked like it was about 3.0 sitting there. PCE is actually still going down, which is good. But look at December. December is starting to reaccelerate a little bit, right? It could be additional hiring. I mean,
zoom in a little more on that.
There you go. How's that?
Yeah.
So you're seeing that, in December, according to Cleveland Fed, we're actually starting to see a reacceleration a little bit of inflation. So you're seeing like and this is live data, all right? I mean, don't take this as, oh my God, this guy was saying on the 11th that it was going to be 3.3. But according to the Cleveland Fed, we could see a 3.3 handle, if things persist the way they are going forward. So,
because core is ticking higher, right? That's what you're saying?
No, core is still going down. So look, core is going from 4.6 to 3.98. But at the end of the day, core is what the Fed is going to make their decision on. But this is what the market seems to be tracking a lot more. So, and not to mention the core is not decelerating that fast anymore either. I mean, you're looking at 0.6. That's what, like 8 basis points? Barely anything is going down.
Okay, so let's do this. Let's say inflation comes in at 3.1 tomorrow, consensus. Market tanks or markets happy? What do you think?
No, that's the thing. We're just going to get choppy. I don't think we're going to be up, down, left, right. I mean, the expectations right now, if you look at all the estimates that Wall Street made, right, the expectations are pretty like on point in my opinion. I think 3.1 is not going to be a shocker to anybody. What may shock people is January, February, when the numbers come out, and it may be hotter than people think. I mean, unemployment is down. The economy is still good. Consumer weakening is not happening as nearly as much. I know a lot of people will say, well, the numbers got skewed a little bit by the federal government because there's just been so much hiring in healthcare and the federal government side. I'm like, at the end of the day, who gives a shit if unemployment is down? So I don't know. Right now, the next 30 to 60 days, I would say we need to dial back a little bit on the euphoria, but
even with that, with unemployment being down, I've tried to find data that tells you how many of those new jobs are one person taking on a second job.
Right.
Because if that's the case, unemployment can continue to go down and the economy is actually getting worse. Because that
or they're auto workers that are coming back, or
like whatever it is. It's not just the job. It's like who's taking that job. Why did they take that job? You have to drill down more than that. And I've never been able to find the data on that.
I mean, these are things that like you really, really have to dig super deep into these things. You can't just assume, right? I mean, you could make an educated guess, but figuring out the state of the economy at that granular level may be a little bit too difficult. All I know is,
but you do admit you do admit that is there's a huge difference between one person taking on a second or third job to be able to afford their standard of living versus a bunch of people versus businesses just experiencing a hiring need or a surplus and being able to hire on more employees.
I think to a degree you want to also look at part-time worker, full-time worker. I mean, how many when you look at the unemployment rate, you're also remember that population over time is growing as well here in the United States. I mean, thanks to immigration, natural growth in the population, those things get factored in. So there's more people working now than there were pre-pandemic, but there are more people in the country.
No, the United States, if it wasn't for immigration, the United States is below their birth rates are declining.
No, I agree. But I'm saying that it's still it's okay. Tangible. Yeah, it's adding a little bit, but you're right.
But you can't say thanks to immigration. Like that's not a good thing. It's not
What
a
do you
good thing
mean?
for. It's not a good thing for a
He
population.
doesn't believe in immigration.
Wait, why is immigration not good for the population?
No,
Like
what I'm
that's
saying
what
is
you
it's
need for
not.
GDP
It's not.
growth.
No, what I'm saying is it's not a good thing for immigration to be masking declining birth rates.
Oh, yeah, that's
not
true.
good.
That's true. There should
That's
be a
100%
natural
true.
level of there should be a natural birth rate
Okay.
that happens, but I mean it's all over the world. There's
The-
people are having less kids.
And immigration rates should be controlled. Immigration rates should be controlled so that the existing population can support the people that are being allowed in.
I agree. Yeah.
Because
fair.
otherwise you have then what you do is you have a strain on some of the social services, both on a state and a federal level.
Yeah.
And that doesn't help anybody. That increases crime, et cetera, et cetera. So
Yeah, I agree.
so gotta make more babies.
I think I just wanted to add one little thing. I don't know if you guys know this, but we're in a bull market. So we're in a bull market and we're heading into year 2 of a bull market. Okay.
Why?
You don't go up 20% plus. It's just statistics. We had our 18 months of the downturn. After that, there's double-digit gains. This is what happens in history. And the second year is followed by, and Tom Lee, I think he's right. Okay. So maybe some people don't disagree, but we're going to have another, let's say, double-digit gain for next year. Yes. And also the other thing that's pointing out, I want to point out a couple of things. The breadth of the market is increasing, meaning we are transitioning some of the gains that were made in big tech because that was a safe bet into other stocks. And yes, you can say it's a pump and whatnot. It won't last. Okay. I think a lot of it will last. They're up from double, triple from the bottom for a lot of these stocks. The third thing is that there's a lot of money that was still on the sidelines, right? I forgot how much they're saying, but there's still what?
6 trillion in money market funds.
6 trillion. Thank you for correcting
It's
that.
funny.
6 trillion still on the
screen.
sidelines. Hold on a second. 6 trillion still on the sidelines, basically thinking that we're in a bear market. They're all going to FOMO in 2024, and you watch. That's what's going to happen. That's why we're continuing into this bull market.
Yeah, 6 trillion money market funds. I mean, a lot of that money is going to have to try to find a home if they can't replicate the rate they're getting. But that's dependent on the Fed cutting. If the Fed doesn't cut, they're going to be able to get
That's what I was going to say. That's what I was going to say was the caveat here of the reason why we might be seeing this bull market now is the anticipation of that. Like, in other words, I agree with you. The markets are going up, but I do think that it could very easily turn around if there's one. It's not as bullish, even though the market we are in a growth period. I do think people are very hesitant, and there will be an immediate sell off if there's any indication.
Okay, but hold on. You could have gone back to 2011 and 12, and everybody thought it was the worst time to be investing, and that was like the best time to be investing. So markets climb a wall of worry, as they say. So that's what's going to happen. That's good. People shouldn't just rush in. They should climb that wall of worry, slowly, gradually going up. And that's what's going to happen in 2024.
Well, all I'm saying is that I think that people are cautiously bullish now, and that any indicator, whether it's CPI or if there's sentiment changes on whether or not we are in fact going to get rate cuts, I do think you could see a flash pullback. I think people are investing because you need to show returns. Remember, these guys need to show returns every 3 months, no matter what. And so there is that, but I do think that we could see a flash pullback if some of the indicators that's giving them the confidence now just.
By the way, a flash pullback is not a bear market. That's just like a mini correction, and then it just goes back up. If it's a flash.
Yeah, the S&P was barely down today, and as Chris is showing, all the big tech, all big 7 were down. S&P was flat, which is really interesting. Chris, go ahead.
I think it's more that now people are rotating from like the safety areas. Because I mean, one of the things that I noticed over the last 6 months is, if you wanted to be in the safe cash flowing businesses, buying back shares, these were the Apples, Microsoft, Nvidia, Google, Meta, whatever, the FANG names. Those are safety. Everything else is kind of like a little bit more on the speculative side, depending on which industry we're talking about. And also some valuations are just out of ridiculously low historically. So I think what's happening is people are selling out of the bigger names that have performed really well and saying, hey, you know what, maybe it's time to get into the more speculative names that are out there that, do rely on valuation and growth to grow their underlying businesses. So we are seeing a sector rotation out of the FANG names and into other things, which is healthy, which is not a bad thing. The question is, where do you align your portfolio, and what kind of allocation do you give it, especially to an index? So do you still do the S&P 500 index, which is geared towards more weighting on big tech, or do you do something that's more on the other side, which is you still want to be in the general index, but more weighted against market cap, and instead weighted more on diversity. So it all
So,
depends.
Let me just point out one thing. All this whole year, people have been sitting, and a lot of people have been sitting in cash this whole year because their fund managers told them, hey, it's better to have a 5% yield than possibly lose your shirt. Well, the S&P went up 20% or whatever. So that's the problem. Now those people are like, what the fuck are you doing with my money? You gave me 5%. Yeah, but this is up 20%. There's still going to be this rotation happening into this growth stocks because they want to catch up to the yield. They're not going to be staying in 5%. It doesn't make any sense long term, especially now as this bull market progresses forward.
And I also want to point out that this is tax loss harvesting season. I think a lot of people are just trying to get those losses in and then rotate them down into something that they think might perform better. So I mean, we got 3 weeks of this, and that's why you see all the chop. Some of the selling is not going to make sense, but it could just literally be that.
One real quick thing.
I don't know why you're saying chop. Everything is up across the board. So
well,
I'm not saying
big tech has not been nice over the past week or two.
Yeah, a week or two. I mean, go ahead, take a look at the actual chart of big tech over this last year. I mean, come on.
Correct. By the way, S&P, I didn't see this. 462.28. We ended at a 52-week high after hours.
See, I mean, like, look, the market is yelling. The market is telling you, hey, we're ready to buy, and we're going to keep buying.
Or do they got some Yu-Gi-Oh cards and it's about to pull out a trap card? Know what I mean? Is it a trap? All right, give me this. What's the best case for this is a trap? What's the best case for this is a bull trap and we're headed to 4,200, which, by the way, JP Morgan, the most bearish bank out there, in comparison, everyone else says 5,000, 5,200. JP Morgan says 42. All three of you, what's one reason why we're heading back to 42?
Well, before you go say that, 6 months ago, everyone was saying 32.
That is correct. That is correct, which
that's
is why JP Morgan probably wrong. Mike Wilson, he's been wrong all year, but
last month people were saying that. I mean,
that's true.
October, remember, October was bearish central, man. Everyone was a bear in October. So,
yeah, I think one thing to Vitaly's point is that I think we're in the second year of the bull market, but the companies actually have to show earnings growth because 2023 was cutting costs, right? Meta, Google, everybody cut costs. There wasn't really AI into the earnings showing growth, but there was a shit ton of cost cutting. Next year, which I think in the second year of AI becoming a thing, there will be AI in the actual earnings because they can't keep cutting workers anymore, right? And then there's going to be an actual issue in the economy if Google starts cutting 10,000 people. So they're going to have to really show growth, which I think will happen because the research I've done says AI is a thing, and I think Microsoft's going to lead it. But if that's there, then who's stopping this fucking market? If AI is actually showing the growth and we get a rate cut by June, even if it's not in March, I don't know if this market's necessarily headed to the downside.
Okay, so I want to take a step back because you guys keep talking about these rate cuts like they're important anymore. They're not. And the reason is because as long as the market is aware of what's happening, it's when they don't know what's happening that's the problem. As soon as they know, we're not going to be crashing. So unless Powell switches the whole thing and just starts raising again and flips it on its side, maybe then there's a crash. But if that doesn't happen and there's a rate cut 3 months or 6 months or whatever and we're flat, no, there's no crash coming, guys. Come on.
This is why I'm saying that things are going to be choppy because the data is going to be coming out every month, and depending on how the data comes out, people are going to go, "Oh my God, we're at the end of a hiking cycle," and then inflation comes up hot, and there goes that theory. Like I said, look at July. Okay, everyone said, "Oh my God, that's the end. July. There's going to be 2 cuts by the end of 2023." Anthony Noto came out confident as fuck on his earnings call. Oh, 2023 by the end of it, we expect. I mean, every CEO was on fucking Bloomberg and everything else. We expect rate cuts by the end of 23. Okay, where's your rate cuts? Guess what? Data comes in, it comes in hotter than you expect. Shit gets weird. Oil especially. Oil and natural gas prices spiked up in the summer because of the Saudis and Russians doing their thing. That pushed the cutbacks back. So I would say just be data dependent. Don't rely too much on forecasting. As the numbers come in, just position your portfolio accordingly. If you see the numbers starting to trend downward when it comes to inflation, everyone is going to start expecting cuts. So you buy into the companies that will benefit from the cuts. And then if you see data coming the opposite and you're seeing higher inflation start to come, do the opposite. Buy some puts or sell some of those assets and sit on some cash and wait until you get a better opportunity. That's it.
Let's move to this topic real quick. Apple, Dan Ives thinks they're going to be
real quick. I just want to just to tack on the Chris's point. I just want to say that I think markets right now are defensively bullish, right? And so I do think that, yeah, so you're right. Last year was the year of layoffs. This year's the year of AI. But to your point about earnings, now that they've given them a premium for the AI, it's now time for us to see that in the numbers. If the numbers come out and we don't see this boost and metrics that were typically flat or had a different rate of growth, and that can be attributed to AI, I do think that the premiums that are being attached to these valuations are going to get cut down.
Same thing with Palantir. Palantir's gotten a massive premium for their AI growth. If they don't show it in the next couple quarters,
they can sustain it as long as there's some proof in the numbers that go, oh shit, there really is something to this. We can continue to give it that higher premium and maybe even more if it seems like the growth trajectory is outpacing the increase in valuation. But if not, then everything's going to pull back. It's just, that's what happens. Everything's going to pull back. You want to be first and you want to be early, right? And so people that are investing now are giving it the benefit of the doubt, saying, you know, the technology AI, saying we want to be there because when the people that are waiting for the proof in the numbers, when they FOMO in, we get the appreciation in, in the asset because we were early and we took the chance. But if there's any indication that their bet was wrong, the markets will pull back.
There's one last thing, and then maybe you can move on, Amit. Okay. You know, I've seen Russell 2000 start to really go.
Can you explain what Russell 2000 is for those that don't know?
The smaller companies. There's smaller companies in the market. That's it. You know, it's just all market weighting. There's just the smaller 2,000 companies in the United States. The key is with the Russell 2000, a lot of people are just generating this bullishness on the Russell because everyone's like, oh yeah, there's going to be a rotation into all these companies in the Russell. And that is where I think there could be a trap because there are a lot of zombie companies in the Russell.
Like what?
Huh?
Like what?
Like skills. Skills
in the Russell? Oh, wow.
Yeah. So, you know, be careful the Russell. There's a lot of zombie companies in the Russell 2000. This is going to be, I think, a stock pickers market rather than a just, hey, buy and hold the index kind of thing. Especially with the Russell, because there are a lot of great opportunities in the Russell 2000. It's just, there's also a lot of zombies in there that could keep things muted for a long time as well. And the Russell's actually, if you look at it, one of the best performing asset classes, because it's actually gone up, I think, almost 11% from the October lows. So, you know.
Yeah, you're right. It was at 164 back in October, now 187.
Yeah.
All right. What do you guys think of, speaking of AI, Dan Ives thinks $4 trillion Apple by the end of 2024. PE is about 30, growing 2% year over year. His argument is they're going to have an AI app store, Vision Pro, $250 price target. Apple's at all-time highs right now at 196, I believe 195. Take the over/under on Dan Ives being correct on Apple.
Rango sent me this video that I had just had a chance to watch a while ago. It was a thing on CNBC on Apple making inside Apple's chip farm where they make the new chips, and they were talking to the head of, I think he's the head of the chip development, and he was talking about Apple has already been developing their own AI. I didn't even realize that they had.
Yeah, they're getting into the LLM race somehow.
It was called Ajax. It was called Ajax. Now, as you know, with Apple, they're usually late to the game on a lot of things, right? But when they come in strong with a fully fleshed out, developed product. So what Dan Ives is saying does not sound crazy to me that they're working on an AI app store and that the Vision Pro is one piece of an overall AI play. I can't see any tech company that's going to have a future that does not have AI becoming an increasing, if not the majority portion of the play of the valuation moving forward. And so to think that Apple's just going to sit by and not do anything about it, I think is silly. It's just more about when are they going to enter the market and what are they going to do? Because they always have a way of entering the market in a space where like not everybody would have been looking for or looking at, and it ends up opening up a new market for them.
I'm sorry. Are you saying Siri is not an AI play when it came out?
No.
Okay.
There really was no AI with Siri.
No.
It's got.
They do listen. Using AI doesn't mean that it's
like a Google search only.
That's really what it is. I mean, to be honest, that's really what Siri is. When you ask it, it just essentially parses Google data. It's not a true AI in the sense.
So do you agree 250 by the end of the year next year, Apple? In a bull market, 250, you think the market lets it get there?
Oh yeah, in a bull market, why not?
Yeah. And
so you guys agree it'll be $4 trillion by then. You agree? At a 30
Well,
PE growing negative.
Again, it depends on what they announce. I mean, we're going to start seeing the new
I don't think they have to announce much.
The Vision
I don't think we
Pros.
have to announce anything either. I think
You
it's
don't think they have to
services
what?
and Vision Pro. That's it.
No,
I mean, the laptops, the iPads, that's not going to get them to 4 trillion. It's got to
No.
be the Vision Pro or.
well, also just the
services.
buybacks, and you pointed out in your tweet, Amit, how many buybacks they do. That's amazing. That's enough to get them to 4 trillion. The fact that services are growing, even if it's single digits, that's growing. Who cares? So I think Apple's just a safe bet in order to hold your money.
I posted this and it kind of disappeared in my feed, but I don't know if you guys saw this. Apple supply chain reports reports half price second gen Vision Pro headset in 2025. So they're already working on
the second gen. That's good.
They're already working on, but that's what happens. You know, that happened with the AirPods and, you know, on the iPods. They're always a year.
No, obviously they're very secretive until they release it, obviously.
But apparently the upcoming second generation version will include 4 versions, one of which will be more price friendly, according to blah, blah, blah. So it seems like they're going to take the roadmap that they did, like the iPad, iPhone have 3 different tiers. The Pro, the Max, and then like the Lite or whatever it is.
That makes sense.
As they figure out how developers actually use this. So I don't know. Did Dan Ives give any specifics?
He thinks there's going to be an AI app store, which is really in the Vision Pro type of developer ecosystem. That's his kind of big bull case.
Well, that would make sense. I mean, it's no surprise that they're going to have an app store specifically for the Vision Pro. It would make sense to pull those together. So that's not like anything new or anything particularly visionary to predict, is what I mean.
Okay, let's move on to this because this just came out. I don't know how many you guys saw this. It was a couple of hours ago, or actually like 40 minutes ago. Google Android App Store benefits from anti-competitive behaviors. Epic Games won a lawsuit against Google. They filed a lawsuit 3 years ago alleging the internet powerhouse has been abusing its power. And today they won, apparently. 9-person jury in the Play Store case apparently saw things through a different lens, even though Google technically allows Android apps to be downloaded from different stores. Epic CEO Tim Sweeney broke into a wide grin after the verdict was read and slapped his lawyers on the back and also shook the hand of a Google attorney who he thanked for his professional attitude during the proceedings. Google's been going through a lot of shit.
Can you bring up the?
Oh, I didn't show you guys. Oh, damn.
No. Oh, sorry.
Go ahead. Yeah, but basically it was a unanimous verdict that came Monday saying that Google fucked Epic Games in this. It's funny. Apple won their.
That's amazing. That's amazing. Apple is not.
I was about to say Apple won their lawsuit, but Google
Apple won their lawsuit. Okay.
Apple pays off the right people, I think. Absolutely.
I guess the question is, since Google's been the Gemini thing was obviously faked. They admitted it was fucking fake. These fucking cheaters. They copied their homework. It probably doesn't matter, but the market didn't like it. What is your guys' reaction to Google now heading another bad headline? Market might take it down.
Sundar Pichai. Am I wrong? Come on. All these mistakes are because
Vitaly, I feel like you're being racist when you blame Sundar Pichai. There's a part of me that just feels like you're being racist here. I don't know.
What are you talking about?
You want to replace the brown guy? I don't know.
No. I was like, everybody go brown or go home.
Vitaly's always been, hey, there's an Indian CEO. We need to invest.
We need to invest in him. He's the only one you should probably not invest in at this point because he's just making mistake after mistake. It's kind of crazy.
I mean, look, this is pretty tough. The Gemini thing was a flop, even though it might be a good product, but the rollout PR was a flop. Then this Epic, if Apple could
I'm thinking Sundar is on his way out. You can mark my words, 2024, Sundar is gone.
Why?
Too many mistakes. Sergey, Larry watching this shit, the board watching this shit, they're like, we should have got a Russian.
I just also think that for a tech company like that, you want someone who's visionary or someone who's incredibly controversial and polarizing. You want someone outrageous. You want to feel like the energy is coming from the CEO. He seems like an operator. He comes in and he operates. And while that's good for a company like Enphase, I don't think it's the type of personality that you need to run a company like that. He just doesn't seem like either the super visionary or the cutthroat businessman. He just seems like a guy who just almost doesn't want to be in the spotlight. And so how are you going to innovate if your leader does not seem like just an innovative guy?
You know, Larry and Sergey picked Sundar. He was with them for 20 years.
At that time, didn't it make sense to bring in a guy to just operate the business and get the company to hit certain metrics? But we're in a different time now, man.
Well, hold on. Rob H is any Russian CEOs leading. Has he never heard of Google? We just mentioned Sergey and Larry. Yeah, Russian CEOs, buddy. Okay. So ridiculous.
Chris, your thoughts on this? What's going on?
And what about Vlad from Hood, right? Robinhood.
Well, he's got to go do what he needs to do for my
I'm
hood
just saying,
position.
Russian.
After that,
There
he can
you
move
go.
on to Google. After that, he can go to Google. Go ahead, Chris.
I mean, first you need to get a better internet service, dude. You're
What,
like
lagging
lagging all over the
again?
place. Yeah.
Oh my god.
But more
Yeah, you're
importantly,
frozen.
Tell your
Dude, I
dad to
got
get
you
off the
one.
porno.
I say let's wait for the data to come out, because I haven't seen the crux of the lawsuit, why Epic won versus Google but did not win against Apple. It'd be a very curious thing to see, because I mean there could be a component that we're missing completely, and it's not something that that I would blame Sundar Pichai wholly on. I think the guy is a good guy. He knows what he's doing. I just don't think that he may be a strong enough leader to push back a little bit against some of the culture that Google has fostered. So I don't know. We'll see. And even with Gemini, I was very impressed when I first saw it. But then when the news came out, especially from The Verge and TechCrunch, that a lot of the stuff was somewhat, it's not, I don't want to call it faked, but it's edited.
It was edited.
You know, and it kind of like does put a bad taste in your mouth. So, you know, it's one of those things that you have to wait until the real critics come out.
What would make you sell Google?
Huh?
What would make you sell? You have a big position in Google. What would make you sell it? You and Vitaly. What would make you sell it?
I'd say something along the lines of just not innovating enough to the point where you can actually replace that search revenue that's been a big part of their
But Chris,
story.
but that's a weird argument you're giving me, because you invested in them because of search. Like, why would you
No,
invest
I know.
in Google?
No. I would say we all know that search will eventually be disrupted to a certain degree by just other incumbents that come out, like ChatGPT and all these things. What I think a lot of people are missing is the public sentiment around Google search getting disrupted, maybe a little bit too over exaggerated, but it's still a concern that's valid. You have to remember that. Like when people say like, hey, I'm concerned that Google's search revenue is going to go down, a lot of people, they're fear mongering. They're like, hey, tomorrow they're going to lose 50% of their revenue. Like, no, motherfucker, that's not happening. I don't think they'll lose 50% of revenue for the next 20 years. But that's not the point. It means that it could happen one day where they're not nearly as innovative to replace that search revenue that could one day negatively hobble them. So I think more on the side of valuation would be the thing. So right now I value Google as an undervalued company, but if I think that the growth is going to slow down to the degree where their cash flows are impacted, it could be means that, hey, maybe I need to reevaluate my thesis. So I would say I was super bull on Google, but I would say I'm still bullish on Google now rather than being super bullish. Maybe it deserves the valuation that it currently has instead of being an undervalued company. So
Vitaly's at a 23 PE. What would you do to sell Google?
I think it's simple. Basically, within 2 years or so, maybe 3, if they haven't shown that they're actually competing with OpenAI properly and not doing any of this bullshit and all these mistakes after mistake after mistake, then I might be willing to get rid of some of my position, maybe half, I don't know. But I think the search business is going to last a long time. I think people discredit how hard it is to remove a winner from power. I think they think it's super easy. I think it's like a 10-year, 15-year, 20-year process to eliminate Google as the clear winner until AI fully becomes what we want it to be. All of us want that to be. So Google has a long history of they keep buying 50, 60, $70 billion worth of shares every year. Even if they're not growing a lot, as Chris discussed a million times already, it's still going to be a good stock to own.
There's one thing I want to say: Google innovates but can't monetize. They take no risk. So let me push back against that. Google takes all sorts of risks. They are known to be the biggest risk takers in Silicon Valley. The problem that they usually run into is that they have transformed into a culture of no rather than a culture of yes to a certain degree. So, there's a lot of people that, hey, I think this is a great idea. They're like, no. And what's funny is the way that Sundar Pichai actually became the CEO is that he was one of those guys that fostered a culture of yes. And I know that sounds weird, but basically Eric Schmidt explains this very well. Let me actually pull up this clip of Sundar Pichai and Eric Schmidt, because I think it highlights the transformation of hold on one second.
Yeah, I agree as well.
While he brings that up, just real quick, he might have been the guy when he's not in charge of the whole company who's like, let's do this, but now he's in charge of everybody, and it's hard for him to say yes. You know, that's very possible that too much politics is involved, and he's reliant on the board and all that. We don't know what his situation is, but he's not the guy who's saying yes right now. He's the guy who's saying wait.
Well, I think
Yeah, I mean, remember,
I think that's the correct assessment. It's very different to be. It's very easy to be the guy saying what you would do until you're the guy. Now that he's in that position, I think he's in a self-preservation mode and wants to protect his position as the CEO. And with respect to Google being unseated as search, I do think that that's coming, and it will be because of AI, but it will not happen as long as the way that people interface with a search engine is with a mouse and a keyboard. I keep saying that there's got to be a new input device that just makes typing words on a keyboard seem silly.
Yeah, I agree. And, you know, this is the reason Google didn't pick up the Maven contract, $229 million from the government, because they had all these employees drinking Starbucks all day, basically protesting against Google working with the government. Meanwhile, they're trying to get search in fucking China, right? And so I think to your point about the culture, really, yeah, they take a lot of risks, but then the culture eroding from those risks materializing into any type of revenue opportunities.
I'm not sure they're taking any more risks. So that's actually a big problem. Like right now, what is their risk? They waited 5 years until someone took their technology and now they're like, we should compete. That's the risk.
Well, ask yourself, what's the last thing that they've truly innovated on? There was a period where Google was coming out
10 years ago
every freaking year. They had that employee program where all employees would work 1 day a week, and Google would fund it and give you all the technology to work 1 day a week on any project you wanted. Gmail came from that. Google Maps came from that. Like they were mining the talent that was within the company to create all of these great products that were passion projects by the employees. After those, I haven't really seen Google innovating much.
No, that's what I'm saying. Google has not innovated in basically over a decade at this point. So the last,
like, what happened to that program? What happened to that program? What happened to paying your employees on a day? The only thing was they would say, when you create whatever it is you create, Google owns it.
I don't know if they got rid of that. I'm not sure they got rid of that. But the problem is, like, even if you have that program,
right? Like,
no, but I'm saying even if you have the program, but the higher ups are like, well, we're not interested in this product. You know what I mean? So
yeah, that's the problem. And I don't know if they still have that program, but what I would find it impossible to believe that for 10 years, no employee has created anything that is a truly amazing breakthrough. I mean, they are the passion projects of these engineers that are working.
They're optimizing ad clicks all day, bro. All of them. A lot of them. Chris, you have the video or no?
Sorry.
I couldn't find it. But basically what happened was Sundar Pichai came to Eric Schmidt, who was the CEO at the time, and said, "Hey, listen, you know, we should hold on one second. You know what? I think I found it. Hold on one second." And Eric Schmidt actually admits to it too. So 1 second.
Is Amit wearing a marriage ring?
Yeah.
No. It's a $7 Amazon ring.
Okay.
Okay.
Our CEO Eric Schmidt, and I remember him being angry once and say because he realized we were trying to build a browser, and he was like, "Do you know what it takes to build a browser? It takes because he had gone through the browser battles. He definitely didn't, was hesitant for us to do it. Partly, how did I do it? I didn't tell people for a while. Just had a small team and worked on it, and only when we had something to show, we had a chance to show the product, and that got people excited. And so, but it is, it's a good lesson. I think if you have a set of committed people, passionate people, you can achieve. Even I couldn't have foreseen what it would eventually become, but shows the power of a small group of committed people. That time.
Now, one of the things that you guys just said, Google doesn't innovate, blah, 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 all that stuff. That's complete bullshit, in my opinion. I think Google does innovate, except their products sometimes don't come 100%.
Can you show us some innovations?
Okay, so look.
Wait, how do you say that's bullshit if there's no real result?
Hold on. Let's take a step back.
What was as transformative as
Let's take a step back. Hold on. Let's take
Transformer Technology, 2017.
Let's take a step back first, okay? Number one, first of all, look at Chrome. It became such a dominant browser that Microsoft adopted it into Chromium. Like right now,
Chrome is innovation.
Yes, Chrome is innovation.
Dude, Chrome's like 20 years old, 15 years old. What do you mean?
No,
2008. 2008. I just looked at it.
Yeah, Chrome dominated, but how is that innovation in 2023?
No, I agree with you. I'm talking about the last 5, 7, 8 years. Besides Transformer, which they basically set on until somebody else took it over. So what else?
Let's do a
Chrome was
decade.
2008.
2010, since 2013, 2013.
2010, let's say 2010 all the way to now, right? You've got Android, which beat
Like,
out
let's
almost
1979
every
to
other,
now. Let's discuss.
huh?
Go ahead,
What
go ahead, Chris. Go ahead, go ahead. Go ahead.
Beat out almost every other competitor except for Apple right now, which Apple dominates on the hardware
Right.
side.
Android is what year?
Google,
Let's see.
Android is the number 2 operating system in the entire planet right now.
2008.
Chrome TV, okay, which is based on Android,
Who
is
uses
in
Chrome
almost
TV?
every single TV on the planet right now. You look at how much Chrome is on all of these companies, I mean, all of these TVs. The smart TV market is dominated by these guys. All right. We may not see the innovation like, oh, there's no innovation, but dude, they have been slowly capturing so much market share in multiple industries. Look at Google Maps. Did anyone disrupt Google Maps for the last 10 years? 15 years?
Apple Maps is legit, bro.
Apple Maps is legit. Hold on.
And what's their
Apple
market
Maps
share?
is legit, and
what's their market
way.
No, but hold on, Chris. All of these
far,
things you're naming are part of the Google ecosystem. None of them are innovations.
The point.
No. They are innovations, but they're in 2008. That was my.
They are. See, you guys don't think innovation is just, oh, well, this was started in 2000. First of all, when it comes to innovation, it's about capturing all this market share and then maintaining that market share and not getting disrupted by the next greatest thing that's coming.
Their whole
Google,
search business is getting disrupted. What are you talking about?
Well, oh yeah, what percentage of search has been
That's
disrupted?
not true.
so far by
That is not
ChatGPT?
true.
No, but hold on. No. But the reason the market is upset at Google is because the assumption. I'm talking about perception. I own Google. I'm just saying the perception is search is out the window.
But
So
that's
my point
the
is
point that
where
I'm
they
trying to.
innovated
But
to keep up with that.
But that's also the fallacy. What percent of Google search has been disrupted? Check last earnings revenue. Tell me how much of their
I
revenue.
know it was up 11% year over year,
But
41 billion. That's why I
So,
invested.
so then how can you
say?
say that that's being disrupted?
But
I
that
mean,
doesn't mean
no.
it's innovated.
But the argument you're making, Chris, is still a defensive argument. They're in a defensive position. They're innovating defensively to keep the stronghold over the parts of the market that they have.
and they're still growing. They're still growing their percentage with GCP with cloud. Did you forget about that?
That's a good argument. That's a good one. Even though they're the third, they're the loser in the cloud race currently. They're still the third.
They're still number 3, but
Which is shocking. A bookstore can beat them, sort of.
Huh?
Which is shocking. A bookstore can beat them. That's sort of a shocking.
Well, AWS started this whole thing.
Yeah.
But
So there are a lot of things that are positive for Google. The only thing that I would say is a tragedy for them is that so much of their net worth or net income comes in from search that if that were to lose even small percentage points, that might worry people. But like I said, I think it's going to take 15, 20 years for that to happen. And the entire time that happens, these guys are going to be generating shit ton of cash flow that they're going to be buying back shares with. You think,
okay,
what about YouTube?
Once again,
Did
first of
anyone
all,
disrupt
I've said all
YouTube?
that. By the way,
Did
I've said
anyone
all
disrupt
that. But
YouTube?
that's
Did
not the
anyone disrupt
innovation
YouTube?
thing.
no,
Hold on.
YouTube's winning. YouTube's winning, guys.
Hold on.
But YouTube was an acquisition. YouTube was an acquisition. It wasn't like it was an internal.
Yeah, but there's tons of companies
That
that
doesn't
bought
matter.
No,
acquisitions.
and that
are
and that
competing
is
in the-
and
That was
that is
Android.
listen, that's fantastic. But I want to make an equivalent here. Okay, Apple's iPhone, the revenue that comes in off of Apple iPhone is equivalent to the revenues that's coming in, I'll say Google on search, right? Apple cannot wait until they get disrupted, until that revenue falls off a cliff. They have to continually innovate. And in their case, it's inventing new products that create new ecosystems that work well with the previous ones to build S-curves on top of S-curves. And I think what we're saying is what is Google doing to build on top of that? They're massive, the monopoly in a sense on search. What are they doing to build on top of that? How are they using that to leverage the next S-curve up that other companies can't compete because they don't have that first leg?
But that's what I'm trying to say. Like, look at some of the products. We don't think of them as innovation, but dude, they're disrupting things also. Like, look at right now with YouTube, right? YouTube and YouTube TV. They literally disrupted the linear TV market. How many people watch more YouTube ever than what they were 5-10 years ago? 10 years ago, everyone watched TV. Now everyone goes on to their browser, watches all these things on YouTube. It's really, really hard to think that Google is not an innovative company. But the thing is, we don't see those small incremental improvements that they keep making, but yet we still use their products all day long and without even noticing.
Well, that's why three of us own their stock. But I also think we're all trying to be objective here as well, of just like,
I have a little
what is the
Google
new product?
in my dividend portfolio, but I'm not
all
adding
four
it.
of us own the stock. So all four of us are bullish, but we're also trying to think, where
overall, I don't think
I
it's
don't think it pays any
I wouldn't say
dividends.
it's a
Carlos.
bad company. I wouldn't say, but that's where I have it. I just bought it in M1. But I wouldn't say like, yeah,
You're
buy
like, one
Google. It's
day,
gonna
I'm
go
aiming for
down.
this one day.
I'm not saying buy Google and it's going to go down.
Someone said
Don't get me wrong.
YouTube TV did not disrupt live TV. Yeah, go ahead. Ask Disney,
No.
ask Paramount, ask any of them right now. Ask any linear TV channels if they're not getting disrupted right now. Go ahead.
The Netflix.
Actually, the YouTube argument
was
is
the one
a valid argument.
Right, but YouTube built off of what Netflix did. YouTube did not disrupt pay cable.
No, wait. YouTube built off of what Netflix did?
Yeah.
What I'm saying is Netflix was the original streaming service that showed you could have a successful network that can compete with the big boys. And from that, yes, inherently, as people spent more time on computers, YouTube grew into...
Carlos is right about this to an extent, because I was listening to the Vice CEO. YouTube paid Vice a lot of money to make high-level documentaries because they wanted to compete with Netflix back in 2014. Now it doesn't matter because guys like us will stream on YouTube and we can, generate some audience. But back then in 2014, YouTube was still a question, right? When you just had these creators, Lily Singh, all those people pop up. But the point is, YouTube TV is, I pay $65 a month for YouTube TV because I need my CNBC. I'm not going through Comcast to get CNBC. I'll go through YouTube TV. It's so simple, right? So I agree that YouTube has been innovative. I guess we're just looking for, what is next for Google of searches potentially being disrupted.
My thing is, look at the revenues, look at the cash flows. If that gets disrupted, then there's a question that we have to ask ourselves. Look at EPS. I would say that, hey, paying a 30 PE for Google is not the greatest idea. Like, you look at Microsoft. Microsoft has a 30-something PE. Maybe it's more deserved. Google does not deserve a 23 PE. I think it deserves at least a 25 PE. So just watch the EPS. If the EPS keeps growing, that means the value of Google will keep growing also. That's all. So,
and the buybacks.
Yeah, and the buybacks.
Right,
and the buybacks help with EPS. So,
all right, gentlemen, I gotta go work.
Please make sure to like and subscribe. We're at 77 likes. Can we get just a couple more likes? Just a couple.
I'm only
Gently,
seeing
gently give us a little bit more likes. Thank you all for watching.
Guys,
440 people
lick
here.
that like button like you've never licked anything before.
Click the like button. We'll be back tomorrow, 9 p.m. Sorry,
push the like button with anything but your finger. With something other than a finger.
We'll be back tomorrow, 9 p.m. and we'll keep it going from there. CPI tomorrow, so we'll discuss all the implications after CPI. Yeah. Thank you, everybody, for joining.
Later.
We'll see you guys tomorrow night.
Bye.
Bye-bye.